Good afternoon to everybody. Welcome to our webinar series, what we call the Expert Speak webinar. We have an absolute expert on tax filing and technology today with us. And it's entirely, it's the less said about Vishwajit. It'll not be enough. He's been an entrepreneur twice over. He's highly successful in building a great company and actually helping people on a very important aspect of their life, tax. So I'll hand over to Vishwajit quickly for him to introduce himself, and then I'll tell you how the webinar is going to work. We should take about 35 to 40 minutes. Before we start, I'd like Vishwajit to just introduce himself and why he started Quicko and the journey so far.
Thank you very much, Atul, for having me here. Like I was saying, I should have been interviewing you, but I'll cut the ribbon for today. So thanks for those kind words. I mean, like I've said a couple of times before, and I mean, you are a living example of it. I mean, entrepreneurship is a journey. It's not a destination, right? So you're never successful. You're always chasing the next goal. So that's what we are doing here at Quicko. So to talk about myself, I was talking to Aditya just before you. I am a Pakka Gujarati. I'm a quintessential Ahmedabadi. So we are trying to build a quintessential Ahmedabadi startup out of Ahmedabad. I was born and brought up here. And there are great advantages and disadvantages of running a startup out of tier 2 cities, always a conversation point whenever I meet entrepreneurs from Bangalore and Mumbai. But at Quicko, what we are in a nutshell trying to do is simplifying taxes for individuals and small businesses in India. I mean, taxes in a way is a taboo. We often don't like to talk about it because anything that takes money out of our pocket, we hate it. So we are trying to change the conversation. It's a necessary evil, right? I mean, it's a very important part of any functional democracy. We need, like they say in Western world, we need broader tax base, lower tax rates, more participation from common masses. So we are trying to do it using technology, create simple product journeys, so that individuals and small businesses can do it themselves rather than it being a black box.
Thanks a lot, Vijay. So just for the audience, Scripbox has tied up with Quicko to help our investors file their taxes more easily, use technology, and where required an assisted expert to take you through the process. And I'm sure that some of you, if not all of you, have tried that. If not, we'd invite you to kindly try the experience and give us some feedback on how it goes. We'll focus a lot today on questions which you all have sent in, and there have been quite a few questions around sort of tax filing, what will work, capital gains. So before I get into the specific questions, over the last few years, the income tax department has constantly been trying to reduce the effort, right? There is the pre-filled XML, there is the Itr Forms. What's your sentiment? What is your feeling around this? Is it a step forward or is it one step backward and then two steps forward? How does the experience work for investors, and how can they use technology to overcome some of this complexity and at times simplicity?
No, absolutely. I mean, Atul, it's a mixed bag, right? I mean, there's a tremendous transformation in terms of technology and governance, right? We've seen, of course, albeit with some glitches, but with GST rolling in tax compliances in India. I often tell my friends, we are probably one of the few businesses where government pays advertising money to promote a business. Every time you go to theater, there's an ad playing, tax bureau, tax file bureau, right? But I mean, we have seen tremendous change in terms of technology. We all remember old days when servers used to crash on the final filing days, and invariably there was an extension. So what I think in general, CBDT and CBIC, both direct and indirect tax authorities, what they're trying to do is open the ecosystem to third-party developers like us, right? Where while government wants to provide basic minimum services, it's platform like Quicko's that do the hand-holding, curated tax filing journey, right? Where we, add all those value-added features that reduces the friction, motivates you to do your taxes yourself. So Subtle forms drastically have simplified. But I think text, like I said, it's one of those necessary evils. Once in a while, there's somebody who throws a monkey in a wrench. There was an introduction of Section 112A about 2 years back with the LTCG 10% grandfathering scheme. So now a lot of investors have to report trade-wise data, right? So it's a continuous conversation. We continuously converse with income tax department. I think ICAI as a body continuously converses with income tax department on simplifying tax compliances. So it's an ongoing process.
So what would be, before I get to the specific questions, just can you give us a broad view for somebody who's new to investing or has been around, just the simple stuff around taxes, around how are mutual funds typically taxed? We'll come to broader tax questions around equity mutual fund versus debt mutual funds versus fixed deposits. So just a quick lesson in on taxation at the taxation 101 in this category.
Absolutely. So Atul, I'm going to very quickly share my screen. So I hope everybody is able to see my screen. So I think we have already gone through the pitch. So I usually start with the basic, Atul, because a lot of millennials, Gen Z is participating into capital markets, especially with so much volatility. Everybody's trying to time the market. We've seen some of the brokers like grow 3x, 4x in terms of active accounts. I'm pretty sure there's tremendous participation in mutual fund markets as well. So for anybody who is just getting to learn about taxes for the first time, there are fundamentally 4 ITR forms, right? ITR forms are essentially forms prescribed by government in which you report your information. So there's ITR 1, which is for salaried individuals, 2 for capital gains, which is something we're going to talk in details. ITR 3 is for business profession income, and ITR 4 is for presumptive taxation scheme. I think coming back to your question, and when it comes to investment and trading activity, Atul, we broadly classified into this 4 categories, right? You are investing in equity mutual funds. You're doing equity intraday trading, which is considered speculative business income. You can also be doing derivative trading with equity, commodities, and currency, or you could be investing in debt, right? These are 4 broader classifications that everybody needs to understand. Now, when we talk about equity and equity mutual funds, one very important concept to understand is equities are traded on exchanges. Most listed equities are traded on exchanges, and you end up paying something called security transaction tax, STT. Whenever you pay a security transaction tax, the treatment of that particular asset class is a little different from everything else, right? Because you already paid tax on it. So up until 2018, long-term capital gains on equity, right? If you hold it for more than 12 months, were completely exempt. If you hold it for less than 12 months, it's considered short-term capital gains, and you would end up paying about 15% rate on it, right? So that's equity. I think equity mutual funds are treated exactly like equity. So you would hold it for less than 12 months, considered short-term. You hold it for more than 12 months, considered long-term. I think where a lot of people get confused, I'll very quickly navigate to it. I don't know if it's visible.
But you go to presentation mode. If you just click on the right top, on the presentation on the right top, yeah, present. Okay.
All right. So.
Okay.
Is it visible now?
Reasonably, it's okay. You can read it.
We've tried to squeeze in a lot of information so that we are able to put the big picture in perspective for everyone, right? So like I was talking about all the different asset classes and different segments within it, right? So fundamentally where people get confused is what is considered long-term and short-term, right? Depending on different asset classes, the definition of long-term and short-term varies, right? So if you're doing equity, like I said, it's 12 months versus if you're doing equity mutual funds, debt mutual funds, it's 36 months when it's considered long-term. And then there are other capital assets like house property and other capital assets, which has a different definition when it comes to long-term and short-term. So I think it's very important to understand what's considered long-term and short-term. It's also very important to understand what's the tax treatment, right? What capital gains is considered something called special rate income. So unlike your salary, which gets taxed at slab rate income, your capital gains income gets taxed at special rates. As you can see in the last column, there are different rates. There's 10% for long term, 15% for short term on equities and mutual fund, and then there are 30 and slab rate are some of the other rates. So as we go along, I think we'll deep dive into some of these topics and talk more about them.
Thanks a lot for that. I mean, that broadly helps us set up the context around the questions. And if you were sort of new to capital markets and sort of filing your returns for the first time, a lot of our customers are early savers. They do their KYC through us and get started. What would be your advice around when should you file your returns? A lot of people sort of save it all up for the last day. What all should you include in your returns? They have some portfolios at Scripbox. They might be also having other income. So given that they're going to use the Scripbox platform and in partnership with Quicko to file their returns, so just how would you help us get started? And because they're all going to do it on their own, things to watch out for, things to include, things to be careful about.
Right. So I think number one thing to understand is just because TDS is deducted on something does not mean you don't need to file an income tax return, right? So there are two parts to taxes. One is payment of taxes, and the second part is reporting of your income. So income tax return essentially perform the second part, which is reporting of your income sources to income tax department. So even when you are salaried, your employer is deducting TDS. That doesn't mean you don't need to file taxes. In fact, you need to file taxes to reclaim those TDS credits as refund. That's number one of taxation, right? I think when we especially talk about investors investing in capital markets, I think one of the things that we usually struggle with reporting of data, right? Because you have to, starting, like I said, 2018, there was long-term capital gains tax introduced on equity and equity mutual funds at 10% if your gains are more than 1 lakh rupees. So you have to report your trade-wise data in your income tax return, right? So you need to have your capital gain statement ready with you when you're filing your income tax return. Apart from that, I think there are other important documents when it comes to filing your income tax return. So I'll very quickly go to list of important documents, right? There is something a lot of you may know. So PAN and Aadhaar are essential to file your income tax return. A lot of people know what Form 16 is, but not a lot of people know what Form 26AS is, right? That's your tax credit statement. So a lot of time what we see with first time filer is they miss out on a lot of their tax credits where TDS was deducted either on salary income, or starting this year, there's also TDS deducted on dividend that gets paid out, right? So you want to make sure that you check your Form 26AS before filing your income tax return. So these are just basic common tips. Have your documents ready. Always don't delegate your taxes to somebody else, because at the end of the day, it's a summary of your financial year, right? And like I said, money saved is money earned. And especially when we talk about capital gains, you want to be saving taxes because it's your hard-earned returns.
Thanks a lot for that, Vishwajit. I'll get into a few specific questions we have from the audience. My CA used to get me some tax refunds. Will I get the same refund if I file online? So the question is that, does it require a personal intervention to get the tax refund, or is the system so geared that if you file your tax properly and the refund is due from you from the government, what happens?
Right. So very interesting question. We get this quite often. It's very tricky to answer. So your tax refund is function of your incomes and your taxes, right? And it happens post the financial year, right? So you go to your chartered accountant or Quicko once the financial year has passed. So all your tax return does, it helps you report information. So you cannot increase or decrease your refund just because Either you go to an online platform or you go to a chartered accountant. That's something you should rather be doing during the financial year. I think we're going to talk about some of the ways you could be saving taxes by being aware of what's available to you under the Income Tax Act. But as far as once the financial year is passed and you are filing your income tax return, there's no formula to increase or decrease your refund. What I would suggest everyone is, like we were talking about technology and governance, lately Income Tax Department has started partnering with a lot of other statutory bodies, right? Including recently they did a partnership with SEBI, where now they're going to get data from exchanges as to how you're participating in capital markets. They already get data because Aadhaar is almost linked to everything. They get data from banks on your bank transactions. So lately you have started seeing on your Form 26AS, there is a new section called SFT, Specified Financial Transactions, right? So if you deposit more than 1 lakh rupees in cash, now government knows about it. So one very important thing I tell our customers is be very transparent in disclosures, right? That's the best way to be tax compliant. I mean, report all your incomes, report all your deductions, and your refund is just function of your incomes and your tax credits.
Thanks a lot for that, Vishwajit. So basically, just to summarize, that refund will happen. The system works, the process works. Online is as good as offline. So it's your call. Online is more convenient, is what we would recommend. The second question is and I think it's from what you just said. So suppose you had 5 things or 5 obvious ways to do better tax planning and tax saving. So there are people talk about donations, people talk about. So could you give us your? Assume the person you're talking to is about 35 to 40-year-old. They've obviously been filing taxes. They're salaried. So somebody with that kind of profile, what are the 5 things you would say, hey, just watch for these and these could help you? So right. It could be obvious. So 5, 7, whatever your top tips are, it'll really be valuable. And this is for the next year, right? So this is about the planning, as you called it.
Right. So, I mean, Atul, I'll start from common things and then go to very specific things. So I think number one common thing I've seen observing tens of thousands of customers who file to us, I usually see that people who are most in control are most financially frugal, right? So people who don't delegate things. I have a chartered accountant who does that. I throw documents at him. It's a black box. I don't know what happens. Somehow I get a refund, right? That's not a great approach to kind of financial independence. I mean, you want to be taking control of it. Even when your chartered accountant files it, I think you should know what gets reported and how your taxes are calculated, right? That's number one. So that financial education and awareness is, I think, very important to financial frugality and wealth generation. I think number two thing is because when you are aware and educated, you know that when you file your return, it's very important to claim your tax credits, right? This is money that has already been paid for by you or by somebody else on your behalf. Last year, they were in excess of 40,000 crore in unclaimed TDS credits with Government of India, right? That's humongous amount of money. That's money from taxpayer like you and I, where we forget to report it in our income tax return. So that's why I put so much emphasis on something like Form 26A. Always make sure that you tally your tax credits before you file your income tax return. I think when it comes to better financial planning, tax planning, I think number one avenue is starting this year. There's a huge debate around old regime and new regime, right? It felt like one of those weak poker hands where finance minister wanted to go all in, but just held herself back. So now we are left with this new regime and old regime. So we get a lot of questions around it. What fundamentally we tell people is, if you have been doing sound financial planning, if you have SIP set up, if you are taking full advantage of Chapter 6 deduction, then you should stay on old regime, right? Because that's where you will get the most tax savings. Well, if you haven't been doing some of those things and you want to take control of your investing pattern, right, where you don't want to invest just because there is XYZ deduction on it. If you want to be, if you're young and you want to invest in more more aggressive asset classes, then I think new regime works for you better, because it gives you that financial independence to take decision on by yourself, right? So that's another very important question that we get asked very frequently. I think just knowing your taxes itself is very helpful. I mean, we towards the end of year, we do something called tax loss harvesting with a lot of investors who file returns with us, right? So it's one of those concepts that eludes a lot of investors. What exactly is tax loss harvesting, right? In a nutshell, it's realizing your losses and hence reducing your taxable income, so that you end up paying less in taxes, right? Because you anyhow had those losses. Meanwhile, you can also realign your portfolio to more suitable asset classes, more suitable asset allocation, right? So tax loss harvesting is something we definitely recommend to our customers. Another important thing I see, Atul, when it comes to investors is, knowing that if you hold something for less than 12 months, it's taxed at 15%. Well, if you hold it for more than 12 months, and if it's less than 1 lakh, it's completely exempt, tax exempt, right? You don't have to pay any taxes on it, on those capital gains.
So just to add to that, which is the two things, if you just get off the presentation mode, I think you'll be more visible.
Right.
And we can hear you and see you more clearly. We all speak with our hands and eyes. The second thing, just to reiterate what Vishwaji said, one is about awareness. So read up, read the blogs from Quicko, Scripbox, wherever you want. Secondly, around tax planning. I mean, so remember that when you withdraw or invest through Scripbox, and this is just not to push Scripbox, they're tax optimized. So when you are doing a withdrawal, it'll actually prompt you to say, how do you make your withdrawal more tax efficient? And those are, I mean, tips we obviously learn in partnership with people like Quicko, but those are things which are built into the algorithms at Scripbox. So we try our best to make customers do that. So yeah, back to you. Thank you for, just being more visible. So awareness, tax harvesting, depending on your situation, follow the first or second regime, and be aware of the tax implications as you withdraw your money. And that 1 lakh, which I think Vishwajit mentioned, is not the amount you've invested, but your gains. So if you invested 10 lakhs and you gained a lakh from that, that becomes non-taxable. So it'll be a great place to be, to have a capital gain of 1 lakh. So yeah, all yours, Vishwajit.
No, absolutely. I mean, I think those are a few basic guidelines. One very important thing that we see with investors, and especially people who participate in capital markets, is lack of awareness around advanced tax, right? Because it's very difficult to calculate, very fluid when especially you are investing in capital markets, right? There are online resources available, tools available where you can calculate your advanced taxes, and you have to pay it every quarter. So any penalties that you pay essentially erodes away your ROIs. So you want to make sure there's nothing chipping away from your ROIs, right? So I would just focus on some of those basic concepts around income taxes to make sure that that hard-earned money that you work very hard, invested in, stayed invested, doesn't go away, right? I think in general, knowing about the financial instruments accessible to you to do tax planning, right? I mean, goal-based planning is one very important thing. I think that is something I learned very early in my career, working at Fidelity, which was one of the biggest mutual fund platforms in US. Is India was built on defined contributions, right? Our parents had pensions, and that's how we mostly did, our retirement saving and retirement planning. I think slowly and gradually, with private economy doing bulk of workload or lifting, I think defined benefits is instead of defined benefits, defined contributions is what's becoming more prevalent. So, right, you investing in right mutual fund plans that co-align with your goals. Doing better goal planning, whether it is retirement, your children's education. I think Scriptbox does a great job at not just getting you to invest, but investing with goals and insight is, I think, another very important thing that we tell our customers.
Thanks, Sujit. And to the audience, we didn't pay him for this. This was his own belief that he's told us this. So thank you for that. The question, which is an interesting question, is around the big brother question. If
Right.
my PAN is linked to all bank accounts and investments, why do I still need to file returns? Can the government not pick this up automatically? and only bother me if there is more demand. And on one side, we talk about privacy, one time we talk about sort of control. And a very good question from the audience is that they know it all. Why bother with it? They've already taken the money. So why they need to file a return? They have the data. If I pay the tax, what are your thoughts around that?
No, absolutely. I think it's a very valid question, right? And I think we are going in that direction. I know it's a kind of counterintuitive for me being a founder of a text filing platform to promote something like that. But I think that's where we want to be. I think as data gets more and more connected, as Aadhaar gets linked to more and more data. I mean, of course, there are issues around data privacy and freedoms around your data and ownership of your data. But I think important thing is what government has been doing, for CBDT has been doing for past couple of years is last year you had a pre-filled XML for salaried individuals, right? So you get all your TDS credits pre-populated, you get your savings interests and other data get pre-populated, your personal information gets pre-populated. So for salaried individuals, filing return today is very simple, which is why it's free across the board, right? Whether you come on Quicko or you go to government utility, it's completely free. I think it's when we talk about ITR tools for investors, especially with capital gains. I mean, trust me, there are multiple government bodies that you interact with, right? If you sell a land or property, you are probably dealing with a municipality corporation or a local body, right? And a lot of local bodies have not digitized their land records, for example. So I think we are getting in that direction where probably in next few years, text filing would more be like e-verification. You just go in and affirm that the data looks okay to you.
Thanks a lot. Yeah, we hope we get there. And then there's a specific question. We probably time for another 3-4 questions. Does Scripbox or Quicko also help in optimizing taxes? So that's something we are planning anyway for next year. One of our offerings is going to be, I'll answer on Scripbox's behalf. Tax planning is something which I think is important and essential. And given our customers are all growing their wealth, it's our job and our duty to help you plan your taxes better. Apart from filing, which obviously, we don't do the tax planning here. We do tax assistance in the filing. But hand it over to you to answer that question in terms of tax planning as a capability.
No, absolutely, Atul. We get asked this question very frequently, right? You have all the data about me. Why don't you help me plan my taxes better? I think one of the conscious decisions that we have taken at Quicko is we have invested our hearts and taxes and simplified tax compliances. At the same time, we see great brands like Scripbox, do a lot of groundwork in personal financial planning. I think tax planning is one of the subsets of personal financial planning, and I think your product journeys and your product experiences are far superior when it comes to personal financial planning. So what we have been lately doing, Atul, is kind of empowering you when you file return with us. Using Quicko's integration with third-party platforms, including Scriptbox, you can, on a consent-based mechanism, you can grant access to somebody to look at your data and do tax planning on top of it, right? Because data is very important to do that. So I think that has been our direction. We let the experts do the job that they are very well aware of.
Thank you. Kind of you. So from a customer's perspective, yes, absolutely. From next year, we hope to be able to build. It's not an easy capability because obviously each individual has a very different set of circumstances, and hopefully, like we build Scriptbox, wealth management, tax planning becomes another capability we offer to our customers. A question which is more simple: can I just upload my Form 16 and bank account statement for the IT filing to be done on Quicko? Is it as simple as that, or does the person still need to do any more? If that's all, if it's a salaried employee, they've got a Scriptbox statement, they've got a Form 16, they've got a bank account statement. Can it all be digitized completely?
Absolutely. I think there is the simple answer is yes. You can upload your Form 16. You can upload. We have worked very hard with Scriptbox team. You can upload your Scriptbox capital gains statement on Quicko now to automatically calculate your capital gains. I think the larger question, I get asked this question very frequently, like why should I file return when government has utilities? You can go and file it on Income Tax India e-filing. Why should I use Quicko, right? So I usually tell them 5 simple reasons why you should use Quicko, right? Number one is 50% of the defective return notices happen because your PAN name as per your PAN does not match with your income tax return, right? What income tax department has in their database versus what you report does not match. So that's number one problem statement. So what we have done is when you onboard onto Quicko, you put in your PAN and we get that data from income tax department. So there's no chances of fat fingering or typoing it in, right? Number two is you can upload Form 16. So we account for all your Chapter 60 deductions, all your tax credits, all your incomes. Number three, we let you upload your Form 26AS, so you never miss out on your tax credits, tax that is already deposited with income tax department, right? Then we partner with great platforms like Scripbox, we partner with Zerodha and other brokerages so that you can easily port your data, because we think tax filing is not a monolithic event. It should not be an island disconnected from everything. In fact, it should be the other way around, right? It should be connected into the larger e-commerce ecosystem in India. So whether you are a small business or individual, you should be able to easily bring your data onto Quicko to do your tax filing. So that's another important thing that we are doing on the platform. So these are some of the reasons, Atul, why users should be using it.
Thanks a lot for that, Vijit. I really appreciate. We got a few very specific questions around grandfathering clauses. We got questions around how do I treat my ESOPs. We have something about segregated portfolios. So I won't bring them here. I'll just tell the audience we will send answers to these questions separately because those are very specific questions. Any last piece of advice from you before we wrap up? We had said 35 minutes. With the new tax regime coming in, and obviously there's a new budget around the corner, I'll ask specific questions. Given the new lower tax scheme, is 80C even relevant going forward, or will that just go out of the door? And what does it do to people who have been sort of availing 80C for so long?
Right. I think the macro picture is, Atul, the tax code is so complicated, right, in India. I mean, there are so many provisions, so many deductions. Every new government introduces a new section depending on different target constituency. I think the objective with new tax regime is to simplify tax code in India. I think even the old regime right now is kind of grandfathered in, you may say, right? It will linger around for some time before it completely goes away. Like I said, under new tax regime, you cannot take benefit of a Chapter 60 deductions, number one. Number two is, if you are owning self-occupied house property that you have taken home loan on, you will not be claimed those interest as a deduction, right? That was one very important thing that a lot of people in 30, 35 age who are buying their first homes used to take benefits of. And then I think the way government has incentivized the new tax regime is the tax slabs are lowered, right? So while you used to pay almost 20% tax on 5 lakh to 10 lakh income slab, now you only pay 5% on it. So I think what we have done is we have created a calculator. It's available. I mean, a lot of other platforms, including Scripbox, has a tax calculator. So you can go and put in your income situation and determine it for yourself, whether it works for you or not.
All right. The last question, which is obviously a big one nowadays. Whenever I change jobs, somehow I end up paying more tax or I end up paying tax penalties. How can I prevent that?
Absolutely. And that's a most commonly asked question on platform. It's the most frustrating questions as well, because right, you thought you were all covered, all paid for. And when you sit down to file your return, suddenly you have this huge tax liability, right? It primarily happens because, Atul, when you switch jobs, you don't disclose your salary income to your new employer, right? What money you made from your previous employer. And hence, your current employer is probably going to deduct TDS based on the income that is known to him, right? Which you report through something called Form 12BB, right? Your other income sources and your deductions and everything. So your current employer is only going to deduct TDS based on the income sources known to them, and hence there are very high chances of less TDS being deducted, which is why at the end of years you see this huge tax liability, because when you combine those two incomes, you go into higher tax bracket, right? What we advise to our customers is, like I said, submit your Form 12BB. Which is your investment declaration. A lot of HR payroll platforms that your employers use already has it baked into the platform. And make sure that you disclose your previous employer and you disclose the salary income that you have received from your previous employer. It will be taken into account when deducting your TDS.
Thank you so much, Vishwajit. It's been phenomenal speaking to you, and thank you so much for all your very sage and wise advice to our customers. I hope they've all benefited like I have. I have learned a lot in the session. To all our customers, thank you for tuning in. Stay safe, stay invested. Wishing you all a fantastic festive season and a very, very happy new year. We'll restart these Expert Speak webinars in the new year soon, and we hope to see you all participate in that. Same to you, Vishwajit, and your team. Thank you for being partnering with us at Scripbox, and we wish you well. Happy New Year to you too. Take care. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully before investing.